What's up, everybody? Ricky here, ready to get into another Sunday prep. Let me get the link out on Twitter, and I'll be right back with you guys. Hold on one second. Got the tweet out, and real fast I just need to go share the link over in the True Trader room. Just make sure everybody is in the loop so they don't miss this episode, because I honestly think this is going to be one of, actually I bet you my volume's really low. Hold on one second. I think my levels were really low there. Hopefully they're better now. I think this is going to be one of the more important Sunday preps. You know, we've been doing this for probably getting close to 2 years now of Sunday preps. You know, we've been doing them for quite a while. Before this bear market had ever started, you know, we were doing these while the S&P was just trending higher and higher and higher. And, you know, once we went into a bear market, you know, one of the things I wanted to make sure we did was we continue to do these until we at least get through the bear market. And, you know, as we get further and further into the bear market, you know, there's a lot of things that we need to always be looking for that are changing, and we need to keep, you know, our antennas up. And therefore, you know, when things start to change, we have to adapt, right? So this is going to be a really important prep, in my opinion. And, you know, hopefully you guys get the value from it. We're going to give it a few minutes as always so some people can kind of come in, and then we'll get started. I know it's probably going to be maybe a little lower attendance for the live stream today, because right now you got the 49ers Eagles game going. Thank goodness the Chiefs game doesn't start till after this prep should finish up, right? So if we start getting close to that time of when the Chiefs kickoff is approaching, you might notice my cadence pick up a little bit. I don't know, Cruz. Cruz is asking if the Niners are going to come back. I'm not sure, man. It's hard to play with a four-string quarterback against a team as good as the Eagles. And, you know, the defense is, there's just been way too many errors. There's been a lot of penalties. Like turnovers are a big part of that game. I'm not watching it right now. I was watching it up until this prep started, but we'll see. You know, I actually, as a Chiefs fan, I hope that the Niners win, because I think the Chiefs will have an easier time beating the Niners than they would the Eagles. We'll see, but Chiefs got to beat the Bengals first, right? Let's not get ahead of ourselves. What's up, Josh? Raul, I see you guys. Hope everybody's having a really good weekend. It's been a great one here. You know, we have, you know, the Chinese New Year festivals are not just like a one and done thing. Like last week, I had a festival to go to as soon as I got done the prep. Yesterday, I took my kids to a different Chinese, or it's not really, I guess I should call it the Lunar New Year, right? But there was a Vietnamese one yesterday I took the kids to. They do some rides and eat a lot of good food. So good times, surrounding myself with the people that matter most, and remembering why we do what the hell we do. Because most people, if they understood what we do for a living, would think we're absolutely crazy, right? You gotta have that why. What's up, Javi? Todd Abrams, what's up, man? Nice to have you with us. If it's your first time joining, if it's your first time watching this, guys, I appreciate you coming and checking it out. Make sure to give me feedback in the comment section after the live stream's over, when the actual video posts to YouTube, so we can figure out what you guys would like to see more of, or what you'd like to see less of. Yeah, and if you're new, go ahead and throw it in the chat. Let me know how you found out about it. Did you see it on Twitter, or did somebody else tell you about it? I'd love to know how you guys are hearing about these. Hey, Cristobal. How's everybody? All right, we're going to get this started, guys. It's your boy Ricky here from True Trader, and this is the Sunday Prep. And as always, real quick, I just want to take care of the guys that take care of me. Cobra Trading is by far the best broker I work with, and I work with a lot of brokers. So if you don't have a broker you can trust and really sleep well at night knowing that they got your back, check out Cobra. There's a link in the description for them. Spikeet, these guys created a platform that allows you to pull historical data on stocks that really cuts that time down that it takes to backtest whether you have a statistical edge or not. And if you don't understand the importance of knowing the statistics behind your edge, that's a whole nother topic for another time. But really, guys, you can't just be trading off your gut. You have to understand that, like, that you need to know the numbers, right? So there's a link in the description for them. I may actually do like a YouTube video just dedicated to like the importance of having these kinds of tools one day, guys. But we'll keep moving forward right now. ScriptsToTrade, these guys make tools for Thinkorswim and Tradervue. Honestly, hands down, best tools I've ever used and best team I've ever worked with. And what I mean when I say that is, if you go and check out the tools that they offer and they don't have something that you want or that you have thought of, reach out to them, because these guys know what you're talking about. They're traders too. And so like when you talk to them, you're talking to another trader, so they get you. And they will work with you to develop whatever it is you can dream up and make it a reality. We've done that. We actually have a tool that I worked with them hand in hand to create for the True Trader community. And it's amazing, right? And it was such a good experience working with them. So check them out if you haven't already. Tradervue, this is who I use to track my performance metrics. Check these guys out. They allow you to use it for free if it's 100 trades per month or less. And obviously you don't get all the bells and whistles, but if you want, there's a link in the description for the different tiered packages that they offer as well. If you are not tracking your performance metrics, I have no idea what you're even doing watching this, because you're obviously, if you're watching this, I think you're starting to take trading seriously and treat it as a business. So the next step is to make sure that you're using the tools that allow you to manage your business. All right. And of course, the earnings this week, it's probably the biggest earnings. Last week was a big week. This week is probably the biggest, right? This is your Amazon, Apple, Google, AMD. Like, look at the list. It's a banger, and make sure you understand who's reporting, because I say this every week. It's your responsibility to not be blindsided by these kinds of things. All right, so we got that out of the way. Let's hit the disclaimer up and we'll start, guys. Neither I, True Trader, or any of our affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment and educational purposes. All right, guys. So, switching screens. Let me move some stuff off my screen so I can see. Right here, obviously, we have our economic calendar for the week, and it's a big week, right? We have the FOMC decision for the Fed rate. Let me see, make sure. Yep. So here we go. The last 2 days of January, and then we're into February, guys. And Wednesday is the FOMC Fed rate decision. Thursday you have jobs numbers, and Friday we have non-farm payroll. So make sure you understand when these numbers come out, what they mean, and the impact that they can have on directional movements in the market. Okay. All right, got that out of the way. Let's hop over to the ES. As I said, it's the last 2 days of the month, and then we will have this monthly candle done. So far, barring any major changes on Monday or Tuesday, we are looking like we may have a inside monthly candle. And remember, we've been talking about the fact that, in my opinion, right, these are just, I make plans for all different scenarios, right? Contingency plans. I make plans for if the market moves higher. I make plans for if the market moves lower. But I also always have my opinion on what I think is logical to happen. And what we've been talking about is that I think what makes most sense to me is sideways action and a narrowing and contraction of the range. Because remember, we've talked about the whole way down in this bear market, we've had crazy amounts of volatility. Like the monthly candles are wide, the weekly candles are wide. We've had some really wide ranging days, right? And as we come down lower and lower and lower, eventually we will bottom, and there will be a time when the bear market ends and we go into the next bull market. But that transition doesn't have to just happen from bear market to bull market, right? A lot of times what you'll see is basing, and basing becomes sideways action where you get basically, I mean, you guys should understand this concept, but a base is built, and the longer the base is built, the way I see it is that the more sustainable and powerful the move from that base can be. And it doesn't have to be a move higher. It could also be a move lower. But that base is where you'll see that contraction of the range, and some good support and resistance levels get built, and then we'll look for a directional move eventually, right? We don't know when it'll happen, but we stay objective. We read trends. We read what the author is writing, and we make our plans. So this kind of fits nicely with that, finally getting a nice inside monthly candle. Now let's start digging deeper into the time frames here. This is your weekly, and remind me if I forget, guys, but this is definitely going to be one of those weeks where as soon as I'm done talking about the ES, I need to move on to the Nasdaq and talk about the Nasdaq as well. But as long as we're still below those December highs, even though we're breaking out of this, I know a lot of people look at these trend lines, right? Yes, we broke out of this trend line, but it's just a visual guide for me personally, right? I just like to see visually where you may have other participants in the market, but you still have clear levels of support and resistance, and clear levels where is until we're above a certain level, this still can be a lower high, right? Until we get above December's highs, this still can be a lower high. So I don't want to jump the gun and say, look, we're coming out of this downtrend on the weekly time frame. Because remember, let's real fast go back to the monthly. The monthly chart is still in a downtrend, right? We've still been putting in lower highs, lower lows, and I don't care if this push up right now is breaking out of that weekly downtrend or whatever. On the highest time frame, and I don't mean the highest, but the highest time frame you're going to see me talk about on the Sunday preps, the monthly chart, it's still objectively in a downtrend. And until we try to probe lower and end up putting in a higher low on the monthly chart, I still want to maintain that this can always, it should eventually test lower, because it's not just going to go straight up. But what will matter is what happens when we test lower. Do we put in a higher low, or do we go and break and make new lows and continue the downtrend? So as far as the monthly chart's concerned, still in a downtrend, okay? Now let's talk about the weekly. Even if we get above December's highs, we still have not really had, at least on the ES, right? So this is debatable on the SPY, but on the ES, we haven't really had that weekly time frame short continuation trigger, meaning the attempt to really go lower. Now you can make the argument that this was it right here after that last, I believe it was the CPI or whatever in December. But technically this broke higher. Now let me show you what I mean when I say the SPY. We could actually make a case for where you could say that we did have that short continuation trigger, and that is the fact that this high here, and hopefully you guys see what I'm talking about. You have this push up here, you have the pullback, and you have this little quick, it barely broke, right? This technically can be looked at as that short continuation trigger when we came below, let me give you the right prices here, 391.64, okay? That was the attempt on the SPY to continue the weekly downtrend, and it failed to do so so far. Now, again, we still need to get above December's highs for me to be able to say that, because as far as I'm concerned, we may stay below December's highs, and this can still roll over. We could still take out this 375 area, 374.77, and then we could attempt to go lower, and we may hold trend to the downside, and we may stay in this bear market, and we may let the author do what the author is going to do, right? We're not here to fight him. We're here to make sure we're hearing loud and clear what he is saying, because price is always right. You got to get rid of the bias. You got to get rid of the ego and be able to switch and listen to the author. So remember, as long as we're below December's highs, we can't really say that this is a higher low yet. If we get above December's highs, there is an argument to be made as far as the SPY is concerned that this is a higher low. And if that's the case you want to make, then the argument becomes that the lows are in. As long as we stay above that 350 area, all dips should be looked at as opportunities to position long, and you have defined risk, and that you think that the bear market is over and we're going to go higher. Just based on the weekly time frame having a failed short continuation trigger. You know, you hear me say this all the time, failed short triggers often create the most powerful long triggers and vice versa, right? So this would be a situation like that, right? This trigger had a defined target of lows. So it should have got back down to these 350s. Instead, we put in a higher low, and we are attempting to now go and test those levels. But keep in mind, even if we break above, let's say we break above December's highs, and you guys can all have your own game plan, your own way of thinking that you're going to express these trades. The one thing I would tell you guys is to keep in mind that these are higher time frames, weekly charts and monthly charts, and you don't have to rush in and think that you're going to miss the bus, because even if this becomes the turning point of the bear market into a bull market, you know, if we get above December's highs, I don't think you have to just plow on into trades. Maybe day trades, maybe 1 to 3 day swing trades, but in terms of like your longer term capital, if you guys have retirement accounts or 401s or SEP IRAs, things that you trade that you just want to set it and forget it, and you're an investor and you're just kind of cash on the sidelines waiting for this market to give you the nod, you don't have to just rush in, because you're going, even if this does start turning into a bull market. Have you ever seen a bull market that doesn't have pullbacks? I mean, it's just natural the way stocks trend that you're going to, in order for a stock to go higher, or an index or anything, it has to make higher highs and higher lows. How does something make a higher low? By pulling back, right? So wait for the pullbacks for those longer term things, and keep in mind you're looking at a weekly chart or a monthly chart, and that, you know, it's not going to just happen in 3 or 4 days. This is something that's going to develop over weeks and months. And also make sure you guys understand that I'm not saying the bear market's over, and I'm not saying we're heading into a brand new bull market. I am saying that there's levels here that we're flirting with, where if they are breached and we reclaim and then we start pulling back and holding levels, there could be an argument to be made. And you still are going to want to watch and see what happens anytime there is a short continuation trigger that attempts to go lower. You're going to want to see what happens when price attempts to probe lower. Do the bulls make stands? Do we put in some really convincing higher lows on higher time frames, especially monthly charts, guys? Remember the monthly charts. Do not neglect them. Let me get back to the ES. Even if we get above December's highs, you're going to eventually, like, let's go back to this is your 0809 GFC, okay? Lower highs, lower lows. Even when if you look, we had how many months of straight up action here from the bottom? These are the lows in March of 2009. The big push up was up for 4 months, 5 months before it finally had a pullback where we broke the previous month's lows. And that was the very first higher low. And that was, you know, this higher low here, you know, a lot of people are going to look at that and feel like they waited too long and they missed the bottom, right? You know, everybody wants to get the bottom. You don't have to get the bottom. Look what happened. If you understand that we're talking long term, the next secular bull market, the last one we had lasted, you know, over a decade, right? The next secular bull market could last another decade. Maybe it's a 4 to 5 year bull market, whatever. You're not missing it if you're waiting a few months, okay? Because look what if you waited for this, the first higher low followed by a higher high on a monthly time frame, look what that turned into. Does that look like you missed anything? Look at that. Like, that was just an insane, and the whole time up, look, there's dips. There's dips on the monthly time frame. Those are the dips where once the author tells you that you are on the right side and that the trend is up via higher highs and higher lows, now you can be patient and buy dips. Now you can pick your spots. Now you can put capital to work and know that your risk is defined and that you have trend on your side. You're not fighting the path of least resistance, okay? And we don't have that here yet. We have not got a higher low on the monthly time frame. Now, if you've been paying attention to some of the stuff we talk about, mainly that looking for a higher low on the monthly chart is really kind of using a cheat sheet, in the sense of what it's really signifying was that on the weekly time frame, you have had a short continuation trigger that created that higher low on the monthly chart. I know this, guys, if you don't understand what I'm talking about, please check out TrueTrader, because this is the kind of stuff I cannot spend the amount of time it would take to talk about on a Sunday prep. But reading trends and reading what the author is writing by understanding what's happening on these time frames is something that's fundamentally almost a non-negotiable if you want to be able to trade successfully. You need to understand the mechanics of how stocks move, and that's something that can't be taught on a Sunday prep. So check it out over at TrueTrader if you're not understanding what I'm saying right now. But yes, even though we don't have a higher low on the monthly time frame, if you wanted to make that argument that the weekly chart did have that short continuation trigger, then you could say that over December's highs still is that turning point, and then we look to buy dips. Now, I kind of want to jump over to NQ. I'm gonna refrain from it. I'm gonna stick with the ES right now, just to give you guys the plan for the week ahead in terms of my levels. Okay, remember, we have some really important economic, like the FOMC on Wednesday, and then Thursday's the jobs, and then I think it was jobs, right? And then Friday is NFP. So we're gonna have some big directional moves this week. But we still got to have a plan, at least for going into Monday and Tuesday, right, before we get Wednesday's Fed rate decision. So in terms of levels that I'm looking at, let's get it on an hourly here. If we open up flat, let's talk about resistance first, okay? If we open up flat or gap down, I'll look at Friday's high a day as the first real level, right? And we also have this level just above it, that if you zoom out and see where that's coming from, you can see that that's been a really, really important level for quite a while, okay? So 41, let's just call it 41.15, and previous week's highs, okay? Friday's high a day. That'd be the first level I'd be looking at. Above that, we're gonna have this 41.80 area, and then above that, let me pull this down a bit. Let's just call it 42.50. Remember, these are ranges anyway. I'm not trying to play things to the penny. I don't care about, like, dude, if you see people on Twitter talking about how awesome their call was because they were 1 cent off the exact high or the exact low, those people only care about one thing, and that's stroking their ego. I promise you that, okay? I don't give a shit about if I'm on the penny. So when you hear me say, even though this line here is probably 42.55, 42.56, I'm gonna round it to 42.50, guys, and you have to understand it's this range. Because when a stock moves into a range, I still have to see certain things happen with the price action for me to even act upon that level, okay? Give me 1 second, let me get some water. All right, so 42.50, and let me see, did I need... Yeah, we'll just call that, I'm not gonna go out any further than that. We may push into those kinds of levels depending on what happens on Wednesday. But keep in mind that this is the Sunday prep. I'm really preparing for tomorrow and Tuesday at best. And every night this week, at the end of the day, I will have a brand new game plan for my levels on the ES, my levels on the NQ, my levels on whatever it is I'm trading, okay? Now, as far as support goes, if we gap up or open basically flat, dude, this is something I wanted to make sure I didn't forget to talk about. Look at the 200-day, the 50-day, and the 20-day. That is I went back and tried to find another time in the history of the ES where you had those three key moving averages this closely bunched up, and you can't really. This is just absolute insanity how close these moving averages are to each other. And it's also not only just that, but it's also right at that key 4,000 psychological level. So that to me, and it's also last week's lows, right? Wednesday was the low of last week. So you have, and it's also the low from January 13th, Friday the 13th. We've had that as the low twice. It's a psychological level. That is, to me, the juiciest, most important level heading into this week. And actually, I mean, again, I hate to draw these trend lines because you guys know how I feel about them, but I feel like this is going to line up pretty good with this too, right? Anywhere down into these areas. Let's say we don't even come down here Monday or Tuesday. Maybe it's, you know, a move down to this level caused by the FOMC decision, right? So the further we come to the right here, the closer you're going to be to that trend line as well. But again, I don't really want to be using these trend lines as crutches. They're visual guides, okay, guys? So 4,000 / 3960s, right? You see 3950 or whatever. All those moving averages, your monthly pivot, that psychological level, such a key level. Any kind of major flush into that level, especially if it happens emotionally, is going to, for me personally, is going to be one of those things where I might put trades on that are risking more than my typical 1R because of how just strong that level, I expect that level to act because of so many different levels of confluence, right? I hope you guys understand that. There is this level here, this annual pivot / 4057 is the pivot, but it was also kind of this breakout level, right? Where we pushed up, we stuffed it, and we did have that attempt to come lower. It held the 200-day, and then that was where when we broke, we've retested it once, but I would like to see what happens when we test it early this week if we do, right? Definitely gonna have my eyes on that level, but this level down here to me is just extremely important. Okay, that's the level I want. I want this 3960 area. Below that, keep in mind below that, and then I'm starting to think that I flip to the short bias, and I really do want to be focusing on shorting pops back into this same level, right? If we get through that level, especially come down here into this 3900 level, which is going to be the next level where I'm looking for support, a bounce back into 4K or 3960 is definitely going to be having my attention to short pops back into the resistance, right? But there are still levels to play as support for bounces as well. I still like this 3820 area. You obviously have the quarterly pivot right there at 3847. And then coming lower, 3700, same levels I think we talked about last week, right? Those levels are still just as important to me. Why? Because we still haven't even tested them. We never came down and tested last week's Sunday prep levels. They were also Monday prep, Tuesday prep, Wednesday prep, Thursday prep levels. We never came and tested them, right? So they're still valid levels. So I'm still watching them. So hopefully you guys remember those levels: 3700, 3650, and then 35 or what was it? 3580s or whatever. Okay, if you need refreshing, Sunday preps are always archived on True Trader's YouTube channel. You can go check them out. Now before I forget, let's get into NQ. There was a huge difference between NQ and the ES that we'd identified a few weeks back, and you know, I don't talk about the NQ too much unless there is something that needs to be pointed out that's slightly different, right? And what was that thing? It was the fact that on the monthly time frame, we did have a higher low. January's lows broke December's lows ever so slightly, right? So if we get above December's highs, we actually do have that higher low on the monthly time frame followed by a higher high, which gives you the ability to say, look, objectively, rationally, black and white, the monthly chart is trying to tell us that we have room to reverse back to the underside of the monthly 20, which is pretty far up, right? That's up at 13.6. You know, we're currently trading 12.2s. So above December's highs on the Nasdaq, and I do start getting kind of bullish and looking to position long. And when you start to see some of the charts we're going to go over, and I mean, that was a huge tell for me, was this yesterday when I was actually creating this prep, going through chart after chart after chart. I was like, dude, there are some charts out there that are just super juicy. Like, they're extremely well set up. And you know, when you have the monthly time frame about to trigger with room back to the monthly 20, it's hard not to want to be on the right side, right? I don't want to be fighting. If this is going to start pushing up towards the 13.6s, I'm not really in the mood to try to fight things on the short side. I'd rather just be waiting for those emotional flushes back into support and start being on the long side. So I did want to make sure people saw that on the NQ. I don't believe QQQ had the same monthly. Let me check before I open my mouth and make a fool out of myself. Yeah, so January's lows on the Qs did not actually break the lows of December, right? But we have broken the highs. We have broken the highs of December in January on the QQQ. To me personally, I really like the NQ chart better. You know, and I use there's a reason I use the ES and the NQ. It's because they have less gaps, right? You have those overnight Globex sessions, and you have less gaps in the charts. And you know, you have things like this where you're seeing that the lows from January did trade lower than December when you look at this chart. But if you're looking at the Qs, you won't see that. Now, granted, the Qs are above December's highs or have breached them, and we haven't yet on the NQ. So, you know, you got to figure out, you know, I would never tell you to only use the NQ and not use QQQ, right? Like, if you want to see the Nasdaq, you should be looking at both and asking yourself, like, what are the differences? And you also need to be, I would never say just follow the Dow or just follow the SPY or just follow Nasdaq. You should be following all the major indices, okay? So I did want to point that out. That is the major difference on Nasdaq versus SPY, okay? Now, real quick, let's get into Bitcoin because I know it's still hot, still a theme, still ripping. It's we're currently up close to 24K. You know, we had this big flag, so it's funny, man, like the other day when I was looking at this, we had this flag develop and we didn't have this candle. Now we have I was gonna say this looks like a flag that could break and we could get another leg, just like this one here, right? Push up into levels of resistance, consolidate, break, next level of resistance, flag, consolidate, break. So, you know, it's just trending right now. And so I'm hoping, no different than what we said last week, is that I'm hoping we get this big pop up here into 25.3, because that's going to be the level that to me is the most key level at the moment. Besides that, then you have the 28.7s. Looks like 28.7 was that major level from, you know, way back. But this 25.3 level to me is really, really important, and I hope we get there quickly. You know, what's kind of sucks is that could happen while the markets aren't even open, right? Because crypto trades 24 hours. But that level to me is where, if I'm going to look for overextensions in any sort of equity that follows crypto or is crypto related, that's where I want Bitcoin to be slamming up into when I'm trying to pick those spots. If we get through that level and start to hold it as support, the next level I'm looking for is up into that 28.6, okay? So that's it. Remember, I don't trade any cryptos at all, but I do follow them because I do trade a lot of the equities. And you'll see, I'm pretty sure Coin's on here. Yeah, Coin's on the prep this week. It'd be stupid not to have it, right? So that's your broader market. Let's head over to the ETFs and bar chart real quick. Let me get the... Should have had this up already. I apologize, guys. All right, so utilities and healthcare had slightly red on the week. Everything else green. The ones that stick out, you got consumer discretionary and tech. Okay, and tech. Remember, like last week, I think I said I was looking to short tech when it slammed up into some levels. It stayed strong and it's staying strong. So like this week, I have a completely different view on it, and definitely that's where I think a lot of the strength is right now. You have some huge tech names reporting this week too. Remember that, all right? So that's going to play a major part. And I did make a note that the only two sectors I thought really looked kind of like weak to my in my opinion was stables and utilities. Okay, and you'll see that when we look at the ETFs. So let's head over to the ETFs. And the first thing I want to point out is I made a note about this too is the weekly chart on XRT. This is retail. You'll see this. There's a few charts that have this. Okay, the weekly chart has now had the weekly short continuation trigger right here. Actually, this was an older one, right? And this one, this trigger right here that is denoted with these yellow circles as the lower highs, got to its target because the target was the lows. So again, once you make new lows, the process starts over. And here we are, push up, pull back, lower high, lower low, and guess what? We could not get back to lows. And now we are breaking back above those levels. So now, and I believe you can see it on the monthly, now we have the higher low followed by the higher high on the monthly chart. So retail, this sector, even if we're not heading into a new bull market, this sector is definitely telling us that, hey, look, the author price is trying to reverse at least back to the underside of the monthly 20. So it would not surprise me to see this sector eventually push up into the 70s, low 70s, 75. Like currently the monthly 20 is at 76.50. We'll see where that moves down to when February's candle starts. But this is very bullish looking. And you know, if we zoom out, zoom in, but into a lower time frame, you know, we had this nice long channel build. I know a lot of people will look at this and the first thing they'll say is this looks like an inverse head and shoulders, right? One of the things I see when I look at this, and I guess most people probably will say like, well, Ricky, duh, that's probably anytime you see a head and shoulders, that's really what you're seeing, is this what creates the head eventually has to become a failed breakdown, right? Because you have a shoulder built and then you breach that neckline and that's where your head is built. But it's really just a failed breakdown. And you guys have heard me talk about these all the time. You come, you poke just below a level, you stop everybody out, you reclaim, and then you get a long trigger. And ever since then, you know, we stayed within the channel, but now reclaim, you've got the again, here's the holy trinity here, right? You got your 20, 50, and 200 day all bunched together. And you have the 20 day crossing back over to 50 day and the 200. You know, you have this to me looks really good, right? So I would not want to fight this sector. Remember, a lot of what our job is entailing is knowing how to pick your battles. If you want to short something, go look for the stocks or the sectors where smart money is not flowing in, right? Where when the market's rallying, those sectors don't get big rallies, right? This is, you know, the path of least resistance on retail at the moment is to the upside, okay? So for me, if I'm going to trade a name in this sector, I really do want it to be one of two ways. I will short, but it's got to be on extensions, right? The only way I'd want to short anything in retail is if this price action just comes flying up into this 75 area, okay? Unless it does that, I'm looking to buy pullbacks on stocks that are also setting up very similar, okay? So very bullish look on XRT. XLF, again, very bullish look here. I feel like at the moment, remember, we just had 2 weeks of really strong financial sector companies reporting earnings, right? You had all the banks, you had a lot of moves that got really, really overdone. The one thing I'll point out about XLF is that Friday's candle may turn into a little bit of a failed breakout, right? We had failed breakdowns, which we had in this too, right? We had, when we finally dipped below this 30 level, it was just forever it was such a short-lived dip below there, right? And it was straight up, higher low, and then we've been off to the races. I would like to see this come back in and retest 35, come check in with the 20-day before I look to be long anything in XLF, just because if you go and look at individual names in that sector, a lot of them have become quite overextended. Now, it doesn't mean they can't go higher, but until this kind of resets and some of those individual names reset, I'm going to be either short bias or hands off, okay? If this were to push into 37 and some of those names that are currently extended get even more extended, I'm going to be pretty short biased for the near term, okay? Remember that, because it's very important to understand the difference between looking for a short day trade or a 1 to 2 or 3 day swing trade to the short side versus what my longer term look is. I think the financial sector looks very bullish. There's still, you know, this one last 37 level that I'd like to see it reclaim and get going, but right after that failed breakdown, it's just been looking really good. Okay, so near term, I think it needs to have a reset. If it pushes any further without that reset, I'm looking more short side. If it resets, then I'll be back to being bullish near term as well as long term. Okay. Real estate. Real estate says that the bear market is over in the real estate sector. Remember, that doesn't mean the real estate market is going to rebound, but I do track this to see how that correlation works, because I do, I just bought a property and we've got money that we are looking to put into some investment properties, but because I'm newer to it, I'm very cautious and very slow and methodical about how I do it. I do watch this to see what kind of correlations there are. But if you look at the weekly chart, same thing we just talked about on XRT. You get the push up into the underside of the weekly 20. You get the pullback. Now, technically, it's not a lower high, but this breach right here was just real quick, and then we broke down. So, let's see, right in here would have been the short trigger to get you back to lows, and it didn't. And we're right back above those levels. So there's still levels above us that very well may act as some tough resistance. We're right into the 200-day. You also have this 4130 area, but when the larger time frames start lining up the way that I'm showing you they are right now on some of these sectors, the safer bet for me is to start buying dips back into support, even for day trades, right? Because we don't want to fight the trend. We want to we need to go with the path of least resistance. And for me, real estate, this sector, the path of least resistance is quickly becoming to the upside. You can be proven wrong, and that's something that's very important to understand how to do. And it's as simple as understanding that what would negate your thesis about the trend. Trends if it's going to keep going higher, it's going to have to do it by making higher lows. So if we are buying dips saying that the trend is up, well, we just have to identify when was the last higher low that we shouldn't get back below. Currently, it's down here under 36, right? So if this is going to continue higher, we don't want to see it come back under 36. So from there, you just create your thesis, right? Maybe you buy dips into 38 with risk under 36. Maybe you're just buying emotional flushes for day trades, and you just understand that as long as certain levels don't get breached, you can do so with confidence, as long as your risk management will get you out of trades where they keep moving against you. Again, real estate's not a sector where I trade a lot of individual equities, but I do like the look of this chart. Now, if you remember, this was one of the ones that had a red week, right? Ever so slightly, right? But we're still kind of holding these levels. We are starting to struggle with getting back above that 134. What I will say is this is a really slow grind walk down. And, it would not take a whole lot, in my opinion, for us to bust back above this, make a higher low, and start to curl again, especially when you look at the weekly. We are right down into the weekly 20. All it would take for us to get back above 134 is a few solid days of up, and then I'd be looking for pullbacks to put in higher lows. I still think this is a very bullish chart. And the funny thing is like, it's hard to argue that when the whole market's been in a bear market and this thing's still trading relatively, if you look at the last year of price action, we're above the halfway point or a little bit more in that range, right? And we just as recently as a few weeks ago, we were right up at the highs, all right? So while the rest of the market's just been getting slaughtered, this sector's been holding fairly well. So even though we're getting walked down, it's just a grind. And if we pop back up and start making higher lows, I'd be ready to start getting long in this sector as well. Materials, another one where, holding levels, it's behaving really well. And so what you're starting to see, right, this should start to sound really repetitive, is we went from, everything was lower highs, lower lows. Now we're starting to reclaim levels and starting to have short continuation triggers fail. That usually happens when we're getting close to having turns. So keep in mind, even if something turns, let's say this thing pulls back, makes a higher low on the monthly chart, and then breaks back above this 84 level. I'll try to draw it real quick with this brush tool. Let's say we do something like this, okay? Come down, breaking January's lows in February. Let's say we come down in February, break January's lows, make a higher low, something in this area, okay? And then push back up and break December's highs, okay? That is a really bullish look. The only thing about that is make sure you understand that That's a long, so that on a monthly time frame, that is a long continuation trigger. If that happens and fails, that is where things can get really, really ugly. So this can happen on all of these sectors. Every sector I'm talking about, we just talked about retail, financials, XLV, like the healthcare sector, and this is materials, real estate, whatever, any of these that we're talking about where they could have these really bullish setups. The only way that the market, once we have those, the only way you're gonna the only thing you're gonna want to really watch out for is if we trigger these and then those fail, because it doesn't happen very often, but failed long continuation triggers on a time frame like the monthly can lead to really, really ugly moves down. Okay, so I just want to make sure you guys understand that. But I don't say that to scare anyone. I just want to make sure that you guys understand what to know to look for to protect yourselves. All right. Other than that, pullbacks, I think to 82 and even the 20-day are still good spots to be getting long. It looks like it could have another leg up. I wouldn't be short bias unless we were up here into the 88s. I think I said that same level last week. Industrials, this one recovered very well. And again, we are holding levels. Let me look at the weekly here. Yeah, this one here is looking like, so we've had the big move up, kind of had that short or attempt to come back down to the weekly 20 via this short trigger here. Made a higher low, pushed up, and now we've had another higher low. I feel like we get back over, let me look at the price, 102.98, and this thing could make a push for 52-week highs, okay? Actually, at this point, it's probably more than 52-week highs. I'm talking about January of last year's highs. So if that happens in February, it'd actually be, 53-week highs, something like that. But watch it over 103, okay? That would be, to me, where I think we could get another leg higher. And again, not something where I would probably be trying to fight this short. Remember what we talked about? I think I said it earlier, right? Staples and utilities. That's where I thought I saw the weakness. And we're getting utilities is next, so we'll talk about it right now. Here's utilities. Now compare this to the charts we were just looking at, right? This one has made this big move up, and this shouldn't sound foreign to you guys if you've been watching these for the last few weeks, because we've been talking about utilities and the fact that I think this right here that we triggered should send us lower. Okay, so we've had the trigger. Everything else was rallying. This didn't rally, right? That just tells me it's just got relative weakness. So I think any push into the underside of the 20 day is the spot to look to get short. And remember, Duke Energy was the idea that I'm looking to get short. It's still on this week's prep. It's still pretty much the same idea, just a different level. And it's based off this relative weakness, right? I don't want to short things that are in sectors that have a lot of smart money piling in, okay? Staples, this is the other one that looks really weak still. And it looks exactly like the utilities chart, right? It looks almost spitting image. So pops back into 74, 75-ish. I think are your opportunities to get short in this sector. So you got 74, you got your annual pivot and your 20-day, and 75 you have the other side of the 50-day. Okay. Discretionary had a big week last week. This is getting a bit extended. It's right into the underside of the 200-day. You have that rejection. You have these recent highs that. Let me get this to extend. Oh, that's why. Still on the wrong tool. There we go. Oh man, I see what happened there. Oh, dude, I got OCD, so I had to get rid of that little dot. Sorry, guys. So you got basically a little failed breakout kind of on Friday. We'll see if it remains a failed breakout, but it's into a convincing area where you would almost expect to see it, right? Into the underside of the 200-day. So, and on top of that, the way it got there, pretty extended. Obviously, I've seen things get more extended. It could get more. But I like the odds of using Friday's highs as kind of your over-under and possibly looking to fade things in this sector, okay? That doesn't mean, so honestly, look, this can turn into some of those charts we were just looking at where you have that failed breakdown. We may come back down, put in another shoulder, and you get that typical, what you guys would call a head and shoulder pattern. And, we're just kind of setting a base here, right? You see this channel. Okay, we've been in this channel, poke below it, flush everyone out, stop everyone out, reclaim. Now we're back up to the top of the channel. Let's see if we reject up there and we get opportunities to buy on pullbacks to levels of support, because I don't think I want to be a buyer up here. I don't want to be a breakout buyer in a bear market. That never really pans out well. Breakout buyers do really well in bull markets. Wait for a bull market to establish itself, and then look at buying breakouts. But when you get these little failed breakouts like this, a lot of times you'll see them just sit right back down. So that's kind of what I'm looking for here in discretionary. Communications, I think it looks gorgeous still, right? We're above the 200-day. We've broken above that channel. You see here was your failed breakdown. I mean, we can just draw this just like we were just looking at with all these other ones, right? Where you get this channel, you get the failed breakdown that shakes everyone out, push up to the top of the channel, come back, make this higher low, and now we're going, right? So I still want to be buying dips on this back to support. If it flies any higher, up into this 57 area, I may look to short just because of an overextension. But again, you have to understand the game you're playing, right? If it's a mean reversion trade and you're trading a sector that's got strength, do not fight it, right? If you're wrong, be wrong. The same way like in a bull market, a lot of people can get away with sloppy stuff because the market is very accommodating, and a lot of times it will cover up your sloppy trading. If you're buying stuff in a bear market, you cannot get away with that stuff, okay? XBI, I still like this one. I still think Biotechs look good. We still had that, especially with the pullback that held that, right? Held that, the top of that flag that it broke out of, and now we're pushing again. So I really like the look of this sector. I think what you're doing basically is looking to buy dips to support. I don't really think I'm looking to fade anything in this sector unless something gets really, really bought emotionally up into this, I want to say 95, but then you have this level up here at 97 too. So, just depends how it gets there and what happens. If it just grinds up there, I think you're still fighting the trend, right? Tech, above the 200-day, had the pullback, the higher low, pushed it back above levels. I can see an argument for possibly looking to fade a push into the 140 area. But again, this chart right here, this ETF is not going to look anything like this next week when we do the Sunday prep with as many of the tech giants reporting this week as we have. So I expect a lot of volatility, a lot of big moves in this sector. But I think, even if some of these behemoths miss and get like really big sell-offs because of the numbers, there's a lot of other names that look really good. And if tech like XLK pulls back to the 50-day and the 20-day, there's a lot of long opportunities, I think, in this sector still. Energy and oil. Now, this is one I've been kind of like playing around with in my head. Is, if and when the bear market ends and we go into the next secular bull market, do these two that have had really, really nice bull runs during the bear market, do they end up rolling over? And I tried to make a fundamental thesis, and I realized it's like, why am I even trying? Because this isn't my area of expertise. This isn't my, I'm not an oil energy guy. I'm a trend reader. I read what the author is writing. So I realized when I was trying to figure that out in my head that I don't need to. All I need to do is read what the author is writing. So as far as tech or as far as energy is concerned, under 8260s is not going to be a good look. Okay, under 8260s, and I might start looking to short pops back into resistance. If it sells off really hard into this trend line, I will possibly look to get long. But what I'm still looking for is for a failed long continuation trigger. So we had one right here, right? So this, I don't know why these circles are so big. Sometimes Tradervue is annoying in the way it does that. Hold on 1 second, guys. Try to fix this for you guys. Okay, so this right here was the last long continuation trigger that got us to the target, got us back up to highs. Pull back to the weekly 20, and you have the same setup right here. Let me just, exact same setup, okay? The pull back to the 20, the push up, the higher low, and then the break. But we haven't got to target yet. That's why I say if we come under 82, did I say 8260? I think that's what it was. 8265. Under 8265, and this becomes a failed long continuation trigger on a weekly time frame. And if you look at the monthly, you got some room to get back to the monthly, okay? And look at what the monthly looks like. You have your highs, your lower high, and then if we break 8260, it confirms that as a lower high. So I am watching that, okay, guys? Just throwing that out there. And then oil is still actually trying to resolve to its target from its last trigger, which let me see. Yeah, it was a monthly trigger, right? The pullback, the push up, the higher low, and then the break. And we still have not got up there. So for oil, we don't want to see under 108, okay? As long as oil is above 108, I think you can still buy dips and manage risk under 108, and I think that there's a good argument to be made to short pops back into the underside of this trend line, okay? Back into recent resistance. So that's the sector analysis. Let's get into the ideas, and I'm going to get to my Chiefs game, right? It's going to be starting soon. So first, we start with the long setups, strong stocks looking for continuation. Oh, before I forget, AI, artificial intelligence, is the new theme. We haven't had a big theme in a while. I think the last big one was EV back when, and actually there was obviously the NFT craze and all that stuff. But and EV may be a theme this week too. We saw that crazy move on LCID on Friday, and Tesla's still ripping too. So EV is definitely a sector and theme, but AI is this huge sector and theme, and I think it's kind of early in it still, right? And the thing about these themes is they just have staying power, right? Because you get real money coming in, real volume, a crazy amount of liquidity, and things stick around. You don't want to be the first person shorting a theme. So you saw Friday we had AI, and AI is the first idea I have this week for long, strong continuation setups. So AI, you had this really big day. Look at the volume, especially compared to, you haven't had any volume like that since back in, this is 2022? Yeah, mid 2022. And that was an earnings report, right? This wasn't even earnings. This is just, you got a lot of FOMO here. And make sure you guys understand that too. Like, just because I'm telling you, be very cautious on the short side, don't chase it either. I'm not trying to buy this if it keeps getting extended without a major pullback. I want to be the guy who's patient. I want to wait for all people that are FOMOing in to puke their positions. The ones that couldn't be patient, the ones that had to get in now and they're buying up here 17, 18, maybe gaps up tomorrow 19, 20. When it starts to turn over and all of them realize like, oh crap, I bought the top, and they all puke, I want to be the guy that's looking to scoop this back into levels, right? The first major level is going to be 16, right? You have the 200-day monthly pivot. It was the breakout level that put us into the gap that we filled, so that gap is closed. But any kind of pullback to that level is a spot I want to take note of, okay? Now, if it let me get into it, intraday, there's a chance, this just does a quick little break of this 17 level. You guys see this from Friday, right? 17 was the last little area where it created, didn't get it, doesn't even matter, right? Doesn't need to be exactly on it, but 17, okay? If it comes and checks in with 17 and does a quick little breakdown where, pops its head below 17, makes everybody puke the trade, and then reclaims and starts making higher lows, I may put on a quick, intraday trend join just to see if it just caused everyone to puke it real quick. If it breaks 17, then starts stuffing on the underside of it, I'll watch for the same thing that happened down around 16, which is right where I want to be buying it anyway, right off the 200-day. But I want to make sure that, one, I am not forgetting that this is a sector and theme and rushing in to short it. I think eventually, like all themes, that it'll get overdone, and this thing could really, really go parabolic. I don't want to be like, dude, and I also don't want to speak in hyperbole, but if this thing's going to go to 27, I don't want to be shorting it at 20, right? I don't want to be shorting it at 22, 23, 24. I want to be patient. And I don't, this happens all the time with these sectors is, people identify them, and then they realize, like, when it's too late, that they missed the whole long side of the trade, right? There'll be a short side, but I want to be patient for the short, and I want to try to capitalize on the long play as well. So AI, there's going to be a ton of sympathy plays, guys. There's so many different names out there. There's two types. There's a lot out there that are legitimately involved in AI, And those ones I think are good targets for, looking for good entries. There's also going to be a lot of scammy POSs that are just issuing PRs trying to attach their name to AI. Okay, and it doesn't mean that if it's that example, doesn't mean it's an automatic short, because remember, it's a theme. But just know the difference between the two, right? So AI, I think, is going to be one of the leaders in this sector and theme, just because of the ticker, right? It's a theme called artificial intelligence, AI, and this ticker is AI. 2, the volume and the move it had on Friday. Okay, so I'm not trying to short it. I want to make sure that I stay out of the way. I'm not trying to get steamrolled, and I do want to try to capitalize on the long. Next idea is MDB 212 bounce area. So basically, we just kind of reclaim this level. There was a beautiful long trigger here. You can see there was, it was actually these circles are drawn on here because before we had that candle, I was illustrating where this would have to go to have that short continuation trigger, and it never got down there. And in fact, now you have the higher low, the push up, and an intermediate high, and then this higher low, and then the break. Where was that break? Above 212. So yeah, any kind of flush off the open back into 212, I want to be a dip buyer for a bounce play and possibly leave a piece on for a swing if it behaves well and closes strong with padding. And it's 212. It closed at 224. Has a $13 ATR, so a flush into 212 is going to be about 1 ATR. Also, just keep that in mind. Okay. AA. I said I want a flush into the 20-day. I don't think we're going to get it now. We've had this. You see Thursday bounced right off that. We've tested this level so many times and it's held. Now you've pulled back. We've pushed up, higher low. Basically, the trigger is over. Is that Tuesday's highs? I think that would be the trigger to send this. I just like the way it pulled back. Reclaimed the 200-day, held that. I'm 100% going to be a buyer off that. A flush down into 50 if we get it, but I don't think we're going to get it, right? So if it starts to go, I'm going to look to join trend on it. 52.25 area holds. That's where I would be interested in looking for higher lows and a trend join. 52.25 and can see yeah, that was basically the breakout area and this level from Thursday as well, right? So this is the level that I want to see retested. If this holds, a flush down into 52.25. If it holds, I get a lot of these people that DM me like, dude, that level didn't work. I'm like, well, did it hold? Right? Like, it has to hold and then start making higher lows, and then I'll play versus that level. You understand that? I'm not just going to buy. Like, we closed at 52.75. A flush into 52.25 is not emotional. Now, if it flushes down into 50.50, which is Thursday's lows, the monthly pivot, the 20-day, the 200-day, that's all down there. That's a different story. I'll buy that for a bounce play for sure. And if I'm wrong, I'm wrong. It's fine. But this 52.25 level is really close by. So I want to see a pullback there, hold, and start to make higher lows, and then I'll look to join trend. 2 different types of trades. Keep that in mind. BILI. I love the look of this. I actually tried to buy this on Friday, guys, and I didn't get any. I was trying to buy the 200-day, kind of like a 26.50 area. Obviously, didn't get there. I like the fact that these pullbacks keep holding this breakout level. We've already got the trigger. It's valid up to 29.50s or whatever, but I don't think it's going to stop there. Like, honestly, this is a swing trade for me, and if I do get filled for the swing, my stop's going, if you want to be conservative as a stop under 25, you want to be a little more aggressive and make sure that you're actually wrong. I think you use under 24.50 as your stop, but I'm looking for 34 to 35 as the target, which is these highs from over here. And I could, China names have been pretty strong. I love the way it's just surfing the 20-day here. I would love to see a dip, pullback, get me in, and then trend trade this all the way back up into 34. All right, flying right along. CFLT. This one I think I've mentioned plenty of times in here. Stalking it. I've been stalking it. We had this little breakdown, failed breakdown. You hear me say it all the time. Reclaim, and now we're back above this trend line, holding the 20-day. They report, when is it? Let's see, I wrote it down. Hold on. Monday after the bell. I'm not trying to trade it before they report. I'm watching to see if the numbers come out if it sends it. I think we had this as a Sunday prep idea back here for this earnings report. Same idea. And the idea was a break above some levels, and I'm going to be a buyer for a swing trade. But it sold off on the numbers, and there was never a trade. Well, guess what? It looks really set up right now, and here come the numbers again. And so basically the same idea. I just want to make sure it's on people's radars, because this is one of those, it's not one of those names I hear people talk about a lot, but I like this name. I like this long base that it's built. And again, here's your tech sector stuff where, remember, if Alphabet and freaking Meta, I guess I should call it Meta, and Amazon, all these behemoths miss and XLK gets brought down to levels of good support, you still have all these tech names that are set up really, really well. All right, oversold reversion setups is the other type of long I look for. There's nothing, right? It should make a lot of sense. There's nothing that's really that oversold right now where I would be willing to look to get long. So now we're moving on to the short setups. Weak stocks looking for continuation. DUK, Duke Energy, no different. Remember, I think last week the idea was into the underside of the 200-day. We never got there. Now you have the 20-day kind of curling over and the 200-day kind of catching up. I'm looking for a push into the 20-day. I'm sorry. Into the underside of the 20-day, the quarterly pivot, and this is a swing trade as well. I'm looking to put this on 103s with risk over 106.50s, and I'm looking for this to come down to like 95 and possibly 90. Okay, same plan from last week, just a different entry. And then the other one is MMM. This is part of the this is if I'm not mistaken, this would be considered part of the staples, right? The staples, consumer staples. Maybe it says industrial conglomerates, obviously, but they make all kinds of products, right? A lot of things that are consumer staple products. And the chart just looks exactly like the XLP chart did as well, right? Just major relative weakness, even though it's been rallying. This thing had sold off really bad on earnings. So I'm looking for a push into 119.60. Basically, the highs from the day of the earnings and that quarterly pivot and where it sold off. So any kind of pop back into 119.60, and I'm looking to fade triple M. And that's it for the weak stocks looking for continuation. There's not a lot of stocks out there that look that weak, right? So the next section is overbought reversion setups, and there's quite a few, right? Because we've been so strong, things have been moving, things are getting a bit disconnected and overextended. First name is Airbnb, 119.70. I'm looking, and if that doesn't work, I will take the next shot up at that 127.20 area. Very simple idea, a parabolic move emotionally up into this annual pivot / previous resistance, and it's, to me, a high quality setup that doesn't mean nothing's 100%, guys, right? But I'll take my shots, because that's what we're supposed to do. We're supposed to know what our A pluses are and not hesitate to hit the button. This is one of them. Okay, if it gets through that level, I have no problem taking my loss, and if it keeps on pushing up into that 127.20 area, I'm there as well. Okay. Next idea is coin. The higher the better. But the spot, so we are right into the level from last Sunday prep, was 61 to 62. We're right there. There's three levels that I'm looking at. Okay, 65, and this 200-day is probably going to be right in that area by the time Monday opens up. 70. Let's see, did I write down 70? I did. And I know people will be like, well, the monthly pivot's 71.40. Why 70? Because of this. Here was your push up, the failed breakout, right? You see that failed breakout right here on October 26th. The pullback, the lower high, then the break of this level was what sent us tumbling, okay? So that's the next level, and that is 70s, basically, 69.50. And then above that is going to be right around that 75 area, okay? So I think it's actually, what did I write down? 75.60. So three levels. Like I said, I want to watch where Bitcoin's trading when this is pushing. So hopefully Bitcoin's pushing up into that 25.3 level when we're pushing on coin into levels that match up with what I'm pointing out right now. W, I'll be watching this one to give the nod, okay? We're up into those levels. I like 66, but I'm not, like, I actually wrote this down on a few names. I'm not going to step in front of it, okay? It's been really strong. I know a lot of people are really bearish on it based on fundamentals and, oh, it's Wayfair and, you know, probably going to do a secondary or they're going to have to raise capital somehow. And so, you know, when you get that really strong bearish sentiment, sometimes things go further than you want them to. And I don't think there's a reason to find the top. Let everyone else find the top. Wait for it to blow off, try to make new highs and fail, right? That's what I want to see. I want to see it try to make new highs and fail, put in a lower high or maybe a failed breakout, and then I have something to set risk against and then put it on. And I may even put this on with a piece of it for a swing, right? But I do like the idea. I like 66, but I also think, you know, any kind of push up into the 70s is even better, right? And I don't want to get chewed up on it. I don't want it to be one of those ones where by the time the trade is ready, I've taken so many paper cuts that I'm mentally exhausted. Okay, next idea is Tesla. I think I'd be an idiot to not have it on the Sunday prep. I think it's on everyone's radar. It's getting extended. It can go further. I like the weekly 20. Okay, let's look at a weekly chart real quick. I like the weekly 20, but this may want 200, right? You guys can see that clear 200 level as well, which was where we pulled back. We obviously bounced off it that first time, and then we retested from the underside, and then we sold off. So again, just like W, I'm not going to step in front of it. I'm just going to wait for everybody else to find the top, and then I'll walk in. Okay, simple as that. The higher the better. I like 190. If it pushes into 190 and I see what I need to see, I'll put the trade on. And again, this is another one just like W where part of this will probably be for a swing trade. Okay, next idea. This one's going to make KH happy because he's always harking on me about why I don't talk about CRM. Well, guess what? We're going to talk about CRM. I think CRM's Friday candle gives me a level to play against because why? Well, it's a failed breakout, right? Just see this nice little, I mean, it's been a top quite a few times, okay? Even if I draw this, if I bring this across, you can see push, stuff. Now we get just above it and slam back down. I'm looking to play any kind of pop back into 166 with risk over Friday's high day. Simple as that. I think should offer a pretty good trade if we get that. And I like the fact that the risk is defined already based on Friday's candle. And the last idea is COF. Remember what I said, a lot of these banks, like, dude, you can look, let's look at a few of them. Like, Discover, pretty crazy chart, right? American Express, crazy. COF, I think it's overdone here. And again, maybe looking at what's possibly a failed breakout here, we'll see. But I'm looking to, this is another one where I just kind of want to wait for the author to give the nod again. So if we push, let's see, we're looking at intraday. I think a push up into here, like this 118 to 119 level, is a good spot if you want to just use Friday's high day as risk. I'd like to see it come under 117.30s. I think under 117.30s, and then I start shorting pops, okay? But I think COF has some room to come back in. So I'm going to see if there's some questions, but I'm not going to spend too much time because the Chiefs game looks like it's 10 minutes in, guys, and I'm not going to miss this. Alex says AI was meta headline on top of that PR came out day prior. Okay. Yeah, I mean, and you're going to have all kinds of AI headlines, guys. What did I just do? Whoops. All right. Yeah, so it's not going to surprise me. You're going to hear the word AI. If you guys have a news service like Benzinga or Trade the News where they call out the news like audibly, you're going to hear the word AI a lot in the coming weeks. Okay, guys? So Cage says, would you look at Microsoft short back to 240 or 238, please? 1 second. The one thing, without even pulling Microsoft up, the one thing I want to point out is that it had a negative reaction to the earnings, and now we're trading higher. That needs to be one of those things that as a trader you guys understand is like it's trying to tell you something, okay? Literally telling you that what was first looked at as negative news or a negative, just a negative headline or numbers, the market is now saying it's okay. And it's back to making trading higher than where it traded down to after the numbers. So that's something you got to read. Honestly, when I look at this, let's just look at it from a trend perspective, okay, I don't think there's a short in it until 260, 261. And I'd like, if it was going to be something that maybe a little lower, obviously you have the 200-day, and the 200-day got respected how many times? Like, look at Microsoft. Into the 200-day sells off. Into the 200-day sells off. So maybe into the 200-day 255 or something if it gets there fast. But if it just grinds up there, it may fail there like it did here, but there's still no trade for me, right? Because that's not what I do, right? I need to take trades that fit my system. The only way I would take a trade at the 200-day is if it ripped right up into it. Same thing with 260s, right? Any kind of rip up into 260s, I'd fade it. But I don't see any kind of reason to think it's a short here at all. And that's just me. Could it go lower? Yes. Make sure you guys understand that. Just because I don't think there's a reason that it's a short, stocks can always go higher and they can always go lower. That doesn't mean, just because you think that it's a short, if it goes lower, that doesn't mean you were right. Just because price did what you thought it would do. It's a coin flip. If you flip 9 coins in a row and they all land on tails, and you go, well, I'm going all in on heads because there's no way it's going to be tails a 10th time in a row, and then it lands on heads, that doesn't make you smart or right. It was still a 50-50 chance, right? You just got lucky. That's all that was. So make sure you guys understand the difference between when something works out from just the fact that a stock can go up or down and doesn't need to have a rhyme or a reason. First, when there was actually some sort of statistical edge or reason why something should have probabilistically done X or Y, right? Just make sure we understand those differences. RK Sukan says, can I look at Boyle or UNG for a reversal for a long swing? So I really recommend people to not touch natty gas stuff unless they are very familiar with it. I just know people get wrecked on this. So, again, it's just lower highs, lower lows. Can it go higher? Sure. Should it go higher? I don't know. Like, honestly, and it's one of those things where I apologize, right? I know people want to get a more definitive answer, but I would have to lie to you to act like I know something about natty gas. Okay, I'm not here to, I don't have a crystal ball. I don't know. The only thing I can tell you is if it's going to reverse, it's going to have to start making higher lows and higher highs. And until then, just let it make lower highs and lower lows until it stops. Okay, hope that makes sense. Javier, thoughts on Meta short previous day's highs? I was looking at Meta for a short. Yeah, if the thing is, if I wanted to short Meta versus previous day's highs, I'd want it to gap down. I'd want this thing to like open, 148, 147 or something, and then rip up into those, maybe the monthly pivot, maybe 152 versus that 200-day, right? I don't know about shorting it versus the high day unless it gaps down, then rips up there. That's just my perspective on it, but I obviously see what you see. Same thing with what we just kind of looked at with a lot of these bigger names, right? These mega cap stocks like Microsoft and Meta really do respect those 200 days, right? Because so many institutions are paying attention to those levels. Cristobal says, what's your opinion on both charts, STAG and RSI? Beautiful trend here. Higher highs, higher lows. Let's look at a weekly. Yeah, I mean, you have that downtrend that was intact. Here was your short continuation trigger that failed. Let me kind of annotate the chart real fast for you. God, I hate when they make the circles so damn big. Why TradingView? Can I make, there we go. Trying to make this circle smaller. Oh my God, the struggle is real, folks. Just gonna leave it, sorry. So here was the short continuation trigger, right? When we broke this level, that should have tried to take us back down to lows, and the fact that it didn't then makes over these highs right here what should send it higher and what is sending it higher, right? So it's just trending. And if you can read those trends, if you can read what the author's writing, that's what he's saying. So it looks like a really beautiful uptrend that's intact, but doesn't trade enough liquidity for me unless it was a swing trade. And again, not something that I trade, but and it's in that, this is in that real estate sector, right? So, and then RSI. RSI looks like it's setting up like it could go. And again, you're seeing this across the board with a lot of names, right? Which is these failed breakdowns, reclaim. Okay, so remember, it's trading in a channel here. Draw this line straight across. You know, you got this channel that it was in, breaks down, and you had some failed breakouts as well, right? That just put it right back down into the channel. But now you got this 20-day curling up, and you have this little setup that could develop. But again, you'd want to see it kind of probably get over 455 and start to hold, and then maybe look, right? But this could just as easily as it did back here, turn into failed breakouts that sends it back down to the lower end of this channel. Again, another one that I like, the liquidity, like it traded 240,000 shares on Friday, right? So I can't trade anything that doesn't trade north of 2 million shares per day. That's usually where I draw that line. Alex says, what do I think of Labu and setup base so far? So the other thing is I don't trade ETFs really. If I do, it's going to be like a SPY or Nasdaq ETF. Like I'll trade SQQQ or SPXL or TQQQ, but I don't trade these other ones. But regardless, you know, it's set up just like XBI, obviously for good reason, right? Because it follows the same sector. Let's see. Let me look at a weekly real quick. Yeah, you've got your lows, right, where you push up underside of the weekly. You do get a failed short continuation trigger. When we break down right here, did this make, oh, it made new lows though. So that short continuation trigger actually took it to the target. What I'd like to see is you know, the sector I love, okay? But it would be nice if it comes and pokes its head below here and then goes. Again, I don't get to choose what the author's going to do. He's going to write whatever he's going to write. But if he were to do that, and then this makes a higher low here, then I think you get back above these levels and it's off to the races, okay? Just is what it is. Again, I'm not trading Labu at all. I see the base, and just remember, I mean, it's going to look just like this, right? Same sector, or same sector, just different. One's a leveraged ETF, right? Sunman, game starts 6:30. Go Chiefs, yes. Yeah, in 10 minutes, right? I'm getting so excited. All right, in the interest of time, just one. Let's go, baby. Oh, and it's one I know that is liquid enough, right? I know AVGO. Broadcom, baby. He's asking about a long on a flush to 585, 586. If that holds, then long kind of logic. Yeah. They had headlines on Friday. Was it Friday or Thursday? Look, I've got it all annotated too. Oh, this was from an old idea. So this was an old swing idea. And it worked, right? So again, and it literally looked, this same setup that's right here happened again right here, okay? Made new highs, pulled back, pushed up, higher low, and then the break right here was what sent it. And now we're back to highs, okay? So, and that's, look at the level. Look at the level I just drew without even realizing what I was doing. That's the level Yogi's asking about. Why do you think that level would be important? Well, it's a retest of the breakout of the trigger. So yeah, a beautiful level. It's funny when I pull up charts like this that I haven't pulled up in a while and they've got old trades on them. But thank you for that one, Yogi. Love you guys. I'm gonna have to call it here because guys, you know the game is coming. Go Chiefs. If you guys don't understand the stuff we were talking about during this prep, it's I don't blame you. It's very nuanced and it's very, you know, a lot of it is it can be very, very confusing. It's very in depth and very complex, but it's very important. So if you don't understand it, check us out over at TrueTrader.net. Use the coupon code, I believe, YouTube in all caps. It should get you guys like 20% off, I believe. And come learn how to read what the author is writing. If not, I'll see you guys in the market tomorrow morning.